All right, and we are live. So welcome back to Dapp University. So before I sit here and do a live stream intro for an entire minute, so everybody who's already in the live chat as we start this video, let me know, can you hear my microphone okay? We had a little issue with our audio yesterday, and I want to make sure that it is fixed before I keep talking. So let me know in the live chat. Can y'all hear me okay? Awesome. Great. So let's go ahead and get started here. So welcome back to Dapp University. Again, we had a little technical issue yesterday, had to cut our stream short, but we are now all fixed and ready to keep going. So we got a lot to talk about today. The first thing I want to talk about is something that would be good for the entire crypto space as a whole, and why you need to understand this, especially in light of the biggest price correction that we've seen over the past, few weeks, actually several months, but over the past week in particular, people have been feeling a lot of pain. I want to talk about something that could be good in that regard. So we're going to get into that. We'll look at a lot of other news updates that have happened in the space since yesterday. Again, we do these live streams typically Monday through Friday in this channel. Just turn on notifications, subscribe. You'll find out about those whenever we go live. We're going to answer some of your questions, check on the current state of the crypto markets, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, like nothing I'm saying in this video is going to be financial advice for you, and there's lots of scammers down in the comment section below. Like, I'm never going to try to give you my phone number on YouTube, ask you to invest with me, try to get you into some secret private chat on a social network and ask you to give me cryptocurrency. It's like not going to happen. I've seen lately people have been making fake accounts of me to try to get people on social networks to do like paid YouTube promotions, because I think that's more believable than like a crypto investment scheme. But that's probably not me. If it is, just like ask that person to send a video explaining what they want and saying your name, like the person they're talking to. That's pretty hard to fake. So let's go ahead and jump into this. All right. So people jumping in the chat here. Automatic Beats, David Stone, Cheryl, DMK, Norm, Strupid, Lucas, Francis, Sergio, Ryan, Merrick, Oleg, technically. Got a lot of people here today. So let's go ahead and jump into this. So, kind of recapping on all this, we're seeing some pretty brutal. Sorry, let me just fix my camera here. I had to totally reset this live setup, so bear with me as I fix this technical difficulty again. Y'all can hear me, which is a lot better than yesterday, so let me just do this. Here we go. I think that should be it. Awesome. So, yeah, we've seen pretty brutal correction of the cryptocurrency markets over the past, several weeks. When I say brutal, like, Bitcoin's down 40% from its all-time high, assuming that we're not in some massive long-term bear market, which I don't think we are, spoiler alert. It's not that brutal in the grand scheme of things, especially if we continue to trend higher, which we have seen some short bounce here. So nobody knows what's going to happen in the short term. Could we have seen another correction and could bounce from here and be a dead cat bounce and go lower? Definitely could. But I want to talk about something that could be a positive outlook on this, all right? So how do you get cryptocurrency prices to go up in the first place, okay? So basically, there's a lot of factors involved, right? It's not just about buying. It's a lot about the amount of volume that's coming through, coins available, all that type of stuff, right? But generally speaking, you either need to get new people to come into the space and buy more coins, or the same people have to buy more coins, or a combination of both, okay? And they have to be willing to buy them at a higher price than, they're at. Or you have to be willing to buy them at least at the price that they are for sale at. So we talk about a lot about who that could be. I mean, we've seen retail investors, people like you and me, who get on, Google and go, how do I buy Bitcoin? And they find an answer, and that leads them to an exchange, and then they purchase that way. They watch a YouTube video like this, right? We've seen a lot of retail participation, but a lot of retail's gotten flushed out from excessive leverage, or just like getting in and getting scared, panic selling, losing their money. We're talking a lot about institutional participation in cryptocurrency, institutions buying cryptocurrency. Last year, we saw this for, Tesla buying $1.5 billion of Bitcoin. We had a lot of promise for institutions, to come into the space. Now, I want to talk about one possible scenario that's on the table here for the crypto markets. the institutions fundamentally work differently than you or I, because they can't always just like snap their fingers and put in, money to assets. Like, you might get a paycheck and be like, oh man, I'm going to put, X% of my paycheck or X% of my savings into crypto right now. And you can, overnight do it or instantly do it or in a matter of days, depending on where you start from. Not all institutions can do that. Okay. Sometimes it's not just one person's money. In many cases, it's a lot of people's money, and it takes guys to go through a lot of process and due diligence before it can move from one place to another and actually make the decision to do it. So institutions are slower to allocate capital. Okay. And one thing, so you have to understand there's already an inherent lag. So if you have all these people who've been watching Bitcoin over the past, year, who might have been saying, hey, we've been looking for the perfect time to allocate this. We've been moving funds around. We've gotten approval, all that type of stuff. It could have taken them a very long time to get to that point. And the really smart institutions who understand risk reward, seen this huge price correction, and want to make a bet on this, okay? This risk reward scenario has changed dramatically for them. Okay, so what do I mean by that? So risk reward is basically how much do you stand to lose versus how much do you stand to gain. So when Bitcoin was at its all-time high, well, you could have basically, if you bought at the all-time high, then there's a distinct chance that it could, drop back down to somewhere in the $40,000 range, right? Maybe even down to the $30,000 high 28s, right? So you could potentially lose, half or more. Okay. But now that Bitcoin is $40,000, what's the likelihood that it's going to go back down to $20,000? A lot less likely than 60 down to 40, and a lot less likely than 60 down to 50, right? So the really smart institutions want to make a bet on this space long term and now have approval. Could see this as a big opportunity. That's one potential scenario here. Now I actually want to pull up something that talks about that. Okay, I'm not just making this up, by the way. Let me just find it. Saw a tweet that I wanted to read off. Let me just pull it up right here. So in the last 24 hours, our vol trading desk printed 3 separate crypto options tickets of 80 million notional size or higher. So the institutions are here, right? So it's always hard to quantify exactly who the participants are going to be in terms of institutions. But it's probably a pretty safe bet that people buying $80 million in size or higher are likely pooled funds of some kind, probably not just owned by one person. Okay. I mean, there definitely can be, right? There's not a lot, but there are some insanely wealthy people out there. But in all likelihood, that's what's happening here. So, like I was saying, the smart ones are going to say it's taking a long time to get ready we can deploy the capital. We see the risk reward scenario has changed. The opportunity has changed for upside profit potential. And, that's a very likely scenario on the table for me. Now, we don't know what that's going to mean in the short term. Even as I'm talking, it looks like Bitcoin is taking a little bit of a tumble downward here. I'm not exactly sure what's happening. Nobody probably knows for sure exactly. But that's where I could see things headed in over the next several months, because a lot of people are worried, hey, we didn't get this parabolic blow off top that we were all promised at the end of Q4 2021. We just want to pack up our toys and go home. And it's well, you might be missing out on the opportunity for the next leg up. I don't exactly know when that's going to happen, but I do think that we will get there probably before we get to some more grueling bear market. And we talked about some of that in the live streams the other day. I mean, that what we've been in for the past 90 days, hard to say that's not a bear market, right? But when people say bear market in crypto, they're often referring to 2017, 2018, 2019. And I just don't think what we're in is anything close to what that was like. So what do y'all think down in the comment section below? So what is layer 2? That's a good question. We'll talk about that later. So wouldn't have to worry about pumps and dumps if you believe in projects, and otherwise just take your profits. That makes sense. So central banks and Visa are partnering up for creating their own CBDCs. I read this morning. Yeah, we're going to talk about that in a minute for sure. What's my opinion of NFTs? We can talk about NFTs more here in a minute. This is we're still up 16% on the year for BTC, so I think we're all good. Let's actually just check to see. Let's get a live update, see if the Twitter information highway is saying anything about the current. So it's saying equities dragging crypto down. All right, so let's actually talk about. Sorry, this is pulling up something random. Let's talk about what somebody in the live chat mentioned here, which is basically this story right here. So Visa and ConsenSys team up on central bank digital currency tech. So what is in this headline? What does it mean? Why is it important for blockchain, crypto, all that type of stuff, right? So a CBDC is a central bank digital currency. So this is something that's been a hot topic in the crypto space. It's a very polarizing topic because lots of people who are interested in Bitcoin, other cryptos, right, view a central bank digital currency as an anti-crypto in many ways. So we're going to talk about that, what the incentives are here in the place to create something like this, what's the likelihood that it's going to happen, okay, how is it going to get implemented. So basically, a central bank digital currency is essentially that, a digital currency controlled by a central bank of a country, okay? So think about like in the United States, the Federal Reserve, the central bank of the United States, they would potentially create a digital currency of some kind that they use, okay? And we've already seen this initiative in other countries as well that have central banks, okay? And now how is it different from crypto? Well, like Bitcoin, for example, is a distributed, decentralized currency. It's borderless, okay? It's not controlled by any one entity, and that one of the reasons it's polarizing is the central bank digital currency is the complete antithesis of that. And in many ways, Bitcoin was created in response to, really, in many ways, was created as a response to practices of the central bank, specifically in the United States, after the 2008 financial crisis, okay? They wanted a hard, sound money that couldn't be tampered with because that's how, our dollars work now. They're a fiat currency that are largely controlled by a central entity, okay? So CBDC, that's what it is, basically. So let's look at the article here and see what some of the takeaways are. So Visa and ConsenSys have been consulting with central banks around the world on new tech for central bank digital currencies. The pair are now looking into pilot cases to test usability. So Visa's teamed up with blockchain tech provider ConsenSys, has been a big player in the Ethereum space, to develop new infrastructure that will support rollout of central bank digital currencies. The block basically is here. The pair has been consulting with central banks around the world. It's about its development potential. Okay. They want to test usability in pilot cases in the spring. So the next 2 or 3 years will be critical. And I think that's an important time to understand here. This is not something that's going to roll out overnight. The key challenge is understanding how the new forms of money can coexist with means of payments and existing systems. All right. So you have to understand the incentives to create a central bank digital currency in the first place, and how we're seeing these incentives in line with the regulations that we're seeing posed for cryptos in the first place. So part of the, you might say, why would you want to create a central bank digital currency in the first place? Like, we already have stuff like Visa. We already have credit card payments. We have pretty good payment systems online. Like, you can just get in, put a credit card as an intermediary. If you ever have a problem, you could get a refund. You could basically contact your bank to dispute a transaction. Like, there's lots of benefits that you would get as centralized payment systems, right? So why do we need cryptocurrency for payments? Why do we need central bank digital currencies, okay? Well, we have lots of thoughts on why we would need cryptocurrencies in the first place. Part of the reason is all that infrastructure that all that stuff runs on underneath the hood is super slow, super outdated, especially when you're talking about moving actual dollars around, not just credit transactions. Okay. But in terms of central banks, like why would they want to do this in the first place? Well, part of it is it gives you a tighter, more granular control over the thing that you have in the first place. So right now, you if you have a fiat currency, you are controlling basically the supply of that currency, and many other aspects of it. But if you make it digital and you have a ledger, then you have an even tighter granular control over it. Okay. Not just that, you also have insight into how it's moving around. And that's one thing people are really scared about with central bank digital currencies is tracking, privacy, right? Okay. People, we have this critique of crypto all the time that's only used by criminals, right? Like it's used for nefarious activities. Like, well, so is green cash, and probably in higher volume than cryptocurrency is. Okay. But if you do away with cash and you create a central bank digital currency and you make people use that, then it's way easier to see like what they're doing on a day-to-day basis. Okay. So we're seeing some response to this type of stuff. I saw this tweet come out a couple days ago. Basically introducing a bill to prohibit the Fed from issuing a central bank digital currency directly to individuals. Okay, and why it matters. So as other countries like China develop CBDCs that fundamentally omit the benefits and protections of cash, that's exactly what I'm talking about. Part of benefits and protections of cash is you just have some money that's you can just use as cash, not tracked. There's lots of other benefits, but that's some of the main ones. Is more important than ever to ensure the United States digital currency policy protects financial privacy, maintains the dollar's dominance, and cultivates innovation. So CBDCs that fail to adhere to these three basic principles could enable an entity like the Federal Reserve to mobilize itself into a retail bank, collect personally identifiable information on users, and track all their transactions indefinitely. Not only does this CBDC model raise single point of failure issues, leaving Americans' financial information vulnerable to attack, that's a huge one right there, but it could be used as a surveillance tool that Americans should never be forced to tolerate from their own government. Requiring users to open an account at the Fed to access United States CBDC would put the Fed on an insidious path akin to China's digital authoritarianism. Any CBDC implemented by the Fed must be open, permissionless, and private. This means that any dollar must be accessible to all, transact on a blockchain that is transparent to all, and maintain privacy element of cash. So in order to maintain the dollar's status, the world's reserve currency in digital age, is important the United States lead the posture that prioritizes innovation and does not aim to compete with private sector, et cetera. Okay, so there's a lot in this tweet thread. This is not everybody's from the United States. Not everybody's gonna, agree with every sentiment in this tweet, right? But the whole point here is the good parts of this that I think that most people watching this channel are gonna resonate with is trying to put a check on the power of creating some sort of digital currency that's just where the tentacles just drive in farther and farther and farther. Okay, so another thing to think about is this right here. Okay, you see the bad things that happen throughout history. Okay, and by central authorities. All right. This is one of the reasons that we're pushing in this direction of decentralization as an answer to centralization and the failures of centralized power structures. I'm not saying they're all bad, but some of the failures kind of fall into two categories as to why the failures happen in the first place. One, it's like a moral failing, as in like the people who are doing it do not have the best intentions. I'm not imputing that necessarily to our institutions here. But on the opposite side of things, part of it's just incompetence, right? Like you try to do something and you don't make it happen. Incompetence doesn't mean you're stupid. That's not what I'm saying here. It's just that you are incapable, incompetent. You lack the competence to achieve the outcome that is the best for everybody, okay? And we see that critique a lot, particularly in that second category, on how like centralized power structures are failing to do what they set out to do, or they're not delivering the best possible outcome for everybody. And so part of that comes with the privacy here. So if you have a central bank digital currency that exposes everybody's transactions, it's not just about like there's some evil wizard behind the curtain who wants to see everything that you do. Because at the end of the day, like you or me, like, does anybody really care that much how we spend our money on a day-to-day basis? Do they really care? But in aggregate, it matters. And in aggregate, part of the issue here is not just is that person trying to spy into this, it's also how does that person keep your information private from other people? So if you take in all my information and you keep it, and then you do not do a good job of keeping that private from other people, and then somebody breaks in and steals that information and steals something from me, or finds out, private information that compromises, security in some way, or whatever it is, right? That's on you. It's not because you were the evil person that wanted to take my information. It's that, you did not store it properly. And that's part of the problem with Web 2.0 as well. It's one of the reasons we want to push towards Web 3.0 is because, people are giving away massive amounts of data online, sometimes way without their even knowledge, right? And that people collecting the data are not always the best custodians of that information. You can go look up haveibeenpwned.com to see how many times your passwords have been exposed to other people. Like if you use the same password on multiple websites, like somebody's probably been into your account multiple times and you may not even know it. They might not be able to take anything from you, but it's the same type of thing. And that's another reason that we're trying to move away from these centralized ways of doing things, because of the problems they've caused in the past and the potential solutions for what they could do in the future. Now, not everything in crypto is going to work. Not everything in blockchain Web 3.0 is going to work. Decentralization is going to have its own problems in and of itself. Sometimes you just create new problems, but the whole point is you try to get the best trade-off that you can possibly get. And, one of the reasons that blockchain is taking off, in my opinion, right now is because this massive change in how humans coordinate, and we've seen the horrors of centralization play out time and time again, and I think people are ready for something else, or the possibility of something else. Okay, and that's one of the reasons I think the invention of and innovation of blockchain technology is actually working, and we're seeing other people jump on the trend. I think it's just not just about a get-rich-quick scheme, although there's a lot of that in crypto, is because the time is right. Okay, we've seen things tried for blockchain in the past. Like we've seen sometimes technology is not wrong, it's just too early. All right, and sometimes the cultural moment has to be right for the technology to actually stick, and that's why I think we're seeing this right now, because you look in the past, and I'm kind of going along this topic, but I think this is important to talk about. If you look in the past and see like the printing press, for example, okay? One of the reasons that the printing press took off is because we were ready for the printing press to take off. Whenever the Gutenberg moment happened, but somebody else probably would have actually come along and created that if Gutenberg hadn't done it. All right, the demand was there. Okay, that's actually a point. If you want to, if you like to read history, Will Durant actually talks about this when he's talking about this period of time right before the Reformation. Okay, so similar type of thing with blockchains right now. We've seen all this type of stuff kind of stick and happen in the past where people have tried it. All right, like try digital currency, try digital collectibles. You can see the white papers of people talking about this. You can see Hal Finney basically talking about Bitcoin a long time ago, okay, way before Bitcoin was even a thing, or NFTs even. But part of the reason I think this is actually taking off now is because the world is ready for it, all right? But I don't think they want the same stuff. Try to keep the show family friendly here. They don't want the same junk just shoveled from one pile to another, which is what a lot of people fear would happen with a central bank digital currency. Is you're just putting perfume on a pig at that point. So we'll see. I do think central bank digital currencies are an inevitability. The question is how they be implemented. Which laptop machine is best for blockchain development? So it depends on what operating system you like. If you have no idea, basically, my short answer on this is always any computer running Mac, Linux, or Windows in that priority order made in the last 5 years. So you don't really need that. You don't need that much system. Your system doesn't have to be that strong in order to do blockchain development. You're not doing like heavy graphics. You're not doing like crazy processing on your computer. It doesn't have to be that strong, okay? Now, if you have funds available, you're going to enjoy having a newer computer. So if you want to buy a new computer, I personally like using Macs. I'm not here to start a stupid fight on which is better. I'm just telling you empirically from watching other people go through this process, people have an easier time setting their system up and getting things to work on Mac over Windows, okay? Now, if you're a competent developer already, you just die hard with Windows, or like, let's say you already have a Windows computer, that's all you can afford, it's totally fine. It's just gonna be a little bit harder, but if you're at that point where you have to make a decision and you have funds available, I would just, like, my first recommendation is just getting whatever sort of latest Mac laptop that you can afford. You're not gonna go wrong with that, all right? Somebody says Linux. Yeah, totally. If you like Linux, if it's just if you're a total beginner, you might get a little overwhelmed by Linux. But it just depends on what you're after. Smith says, I heard developers say Mac OS is more suited for coding. In general, it's part of it. It's Unix-based operating system. If you want to do stuff on Windows, I'm not a huge Windows user, but if you want to do stuff on Windows, you typically have to do some more configuration to kind of make that work. We send a lot of people towards Windows subsystem for Linux to make things happen. Now, I know some of the recent versions of Windows may have gotten a little bit better, but I'm going from my experience helping a lot of other people get started on this track. Somebody says, love when YouTubers say family friendly, like the whole family with little kids. You'd be surprised. I hear a lot of people talk about they watch the videos with they don't sit there necessarily. The kids are like watching, trying to take in the information, but they'll watch stuff with like kids sitting around them. Or sometimes they'll like turn on some of the more spoken word type of videos that aren't coding, and they'll watch them in the car or something, like on audio only. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps the videos out so the more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, actually I become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp to get started today. You don't have to be an expert to get started now. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for